Yet again, AMC stock continues to hold with strength. Yes, the stock is down 4%, but take for an example something like PayPal, down 7%. Facebook, down about another 7% as well. Square, down 6.5%. AMC, only down 4%, is actually one of the best performing stocks in the portfolio today. Now, exactly why is that? Well, we're going to get into it. We have a big catalyst today and after hours. We have Tesla earnings, as well as tomorrow we do have a lot of Fed speakers, including Fed Jerome Powell, and that is either going to help the markets a lot or it's going to hurt the markets a lot. Now, I will tell you guys right now that there's a lot of call option activity for AMC stock expiring tomorrow. So it's very weird seeing a lot of that risky option activity, and we got a lot to talk about. So let's get into it. Hit the like button, subscribe to the channel, do what you guys got to do. If you guys want to come trade with us, every time I make a trade, I send out alerts. Link down below in the pinned comment. Never a recommendation, but just giving you a glimpse into what I am trading and why I am trading these things. So getting straight into it, AMC stock down about 4.26%. If you look at one of my portfolios, you will see Lucid down 3, SoFi down 6. Like I said, Fubo down 5.5, DraftKings down 5, AMC, there you go, down 4, Snapchat down 7, something like a Square down 7, PayPal down 7, Bolin down 8.5. So it's pretty damn clear to see that AMC stock is holding up very, very well. Now, why is this? Probably a large part due to we're sitting at a very important technical level. We have neither broken under that in a substantial way, and we have not broken above that. Now, yesterday we actually did close above that 50-day moving average, but the move in after hours obviously brought us down, and this move bringing us further down. But we do have big catalysts in after hours, which is going to be Tesla earnings. Now, it could go either way, but Tesla is very expensive on a book value, about 200 price to earnings ratio. A normal price to earnings ratio is like 30% for a growth stock. That's around where Apple trades at. And the average on the S&P 500 is like 17. So they have a lot to prove here. If they can prove it and they're doing great, then the markets will likely rally based off of that. Just like a lot of these stocks are down because Netflix is down like 34% today, right? So it goes the same way with good and bad. It will help out the markets because after all, the markets can trade short term off of fear or greed, but they always will revert back to fundamentals. So if fundamentals look like they are good via Tesla earnings, consumer is good, margins are good, even a company like Tesla that needs commodities, right? Like metals, nickel. You guys know about the short squeeze. They need those components for their vehicles. If Tesla can do well, then any other company can do well and really has no excuse to poor performance. So that's going to be very big in after hours. I cannot stress that enough. A majority of the markets are going to be paying attention to that one. Now, on top of that, like I said, you do have the Fed that speaks tomorrow at about 11 a.m. in the morning. Now, if the Fed is going to go ahead and do that 50 basis point rate hike, that 0.5% rate hike, they're going to let us know about that tomorrow. So if they do, then hey, it's kind of what we expect. I don't expect anything too crazy. Now, if the Fed says they want to drastically reduce their balance sheet faster than what the markets expect, that's where you run into a little bit of an issue. And that's what I have been talking about almost every single day here on this channel. The bond market continues to go higher. And there's this big divergence right now within the bond market and the stock market. So long story short, I do want to play you guys about 30 seconds of this video. And this analyst kind of explains exactly what is going on. And I think that is very important to pay attention to this, get these different opinions. So not necessarily a good thing for the markets, but we have to talk about it. And then we will get more into what is going on with AMC today. So
I'm really worried about this diversion. I mean, as you say, the government bond market is way down and price is down. Of course, the yield is up and pushing on 3%, as you mentioned. But there's also other markets. I mean, you look at the LQD, which is the investment grade corporate bond index.
High yield.
It's March lows, and the same thing with the high yield market in particular. We see that testing its March lows, and credit spreads widening out to their widest levels since March. And yet the stock market is nowhere near its March lows. And when you get that kind of divergence, as we've all heard many times, the bond market, when there's divergence, the bond market's the one that's usually right. And at some point, I think the stock market's going to have to come down a little bit.
Yeah, and that's kind of, long story short, what I've been saying. You can get these divergences where the markets do go up, stock market goes down, right? If you pull up TLT, that's the 20-year treasury bond. This thing has been pretty much straight down, besides today it is up 1.27%. So that is a good thing for the markets. But you could see it's been pretty much straight down. But what has happened to the S&P over the same time frame? It's been pretty much straight up. So you're starting to see the S&P come down to kind of match the bonds, but we are not even close to getting there. And if you really scroll it out, I mean, this was the March, no, actually, where was March? That was like right here, right? The bond market's seen a little bit of a pop when the stock market did as well, and then it came straight back down. And we've really missed all of this straight back down action in the stock market. And like you said, usually the bond market is correct because the bond market is 9 to 10 times larger than the stock market. It's massive. Average Americans own $55 trillion worth of bonds. So it tends to be right more than the stock market because the stock market tends to be very liquid, trade off of fear and greed for the most part and fundamentals, whereas the bond market simply trades off of future expectations, not really that fear and greed aspect of it. So pretty interesting right there. It would suggest the markets do have some ways to come down, especially if earnings are bad. That's why Tesla earnings are going to be so important later on today. Netflix was already bad. If Tesla is bad, it's going to get real bad. If Tesla is good, then we could get a massive boost tomorrow, especially if the Fed does not say anything that we are already not expecting. So I hope that made some level of sense to you guys. It's not looking all too good here in the markets, but it's going to come down to the Fed and earnings. And next week is really where we do kick off a lot of the major earnings. Now, with Tesla, I do want to say as well, you're expected to get a tender offer from Elon Musk, where essentially if you type in what's a tender offer in stocks, it means a tender offer is a public bid for stockholders to sell their stock. Typically, a tender offer is commenced when the company making the offer, the bidder, places a summary advertisement or tombstone in a major national newspaper, and the offer to purchase is printed and mailed to the target company's stockholders. So it's not necessarily a good thing. It could be seen as a good thing for Tesla, and there's definitely going to be a lot of volatility for Twitter. That's what everybody is talking about, a tender offer here on 420, where Tesla is reporting their earnings. So that's going to be very important for multiple different reasons. But you really want to watch the margins on Tesla. If they can keep that, 30% margin, that's going to be one of the most important things. If they cannot, if the cost of these metals has went up too much, then that's not going to be good. Especially, it would seem like they have had a lot of troubles with that over the past quarter, because Elon said, hey, if prices don't come down, we have to get into, even mining our own metals for our batteries and cars. So that's kind of a glimpse. Probably not going to be too great, but we'll see. Maybe the stock split news will offset that if we get any clarification on that. Either way, like, it literally could go either way, up or down 20%. So that's kind of what I expect, 10-20% up or down. It's a very crucial moment. Now, as far as AMC stock is concerned, you could see all of this weird call activity for April 22nd. That is obviously going to be this Friday. A lot of 1750 calls coming through, in between about $25,000 and $56,000 per order right here. And then April 22nd, $18 call as well for $31,000. One put order for $27,000. Another call order for $1850. All of this expiring tomorrow, besides the one put order that is a $16 May 20th put. And that does expire here in about 1 month time exactly. So a lot of weird call activity for the day. Last time we seen that was not yesterday, but the day before that. And it was a very red day. And you've seen like $80 million worth of calls that were bought. The next day, the stock rallied 7%. So I don't know if it's kind of a glimpse into what to expect tomorrow. But if that is the case, I would expect a decent move to the upside. Hedge funds usually don't put hundreds of thousands of dollars into very risky options like these ones, unless they do know something that is about to happen, or they have a strong hunch, we'll just call it that the stock is going to move up here in the next 2 days. Now, as far as The short interest of free float, that is 19.47%. Current shares that are sold short of 100.35 million. Cost to borrow max of 3.38%. Utilization of 100% and days to cover sitting at 2.37. So still primed to see a squeeze whenever that does happen. But I will tell you right now, it is going to be based off of any news that does come out. So you're not going to see just a random squeeze out of thin air. You're going to need to see a catalyst, which I personally think is here on the near-term horizon. As far as the max pain for this Friday as well, that is $18 per share. The Stonko tracker data, I've said it before and I'll say it again. It's not as important what is actually on the chain as of right now. What is more important is obviously going to be the weekly option activity, the options that come through on the chain on a daily basis. That's going to be much, much more important for the stock. Now, I don't know what they did to this. It's only saying we have the May 20th, July 15th. That's actually very strange. Hold on, let me see if I can fix it real quick. Maybe we can't. We'll just have to come back to it in another video. Yeah, it's acting very strange right now. That's oddly weird. But for May, you have 2 calls that are in the money. Of the money calls at 850. These numbers don't even look correct. I don't think they could be correct, but it does say AMC stock. So that is weird. I'll have to figure that out. That's pretty much going to be all for this video as far as technicals are concerned. Watch the 50-day moving average. That's going to be the most important level. That is at $18.64 per share. We did close regular trading right on that 50-day moving average at $18.64 per share. And then we did come down in after hours after Netflix did report. And then we have continued to head down ever so slightly throughout the day today. Tesla, you could see the same kind of reaction. If Tesla earnings are good, the markets will likely rally in after hours. So that's why it's going to be so important. If you break above the 50-day moving average, it's clear you could head to $18, $19, $20, $21 per share. By even Friday, you're going to get a little bit of resistance at $21.35 per share. That is the 100-day moving average. And watch the $15 level for some support. The MACD is extremely bearish. It's been bearish for a while now. We started to see a little bit of a curl up yesterday, but that obviously fell apart because of what we are seeing today. The RSI definitely has room to move up as well. That's at 44.78. Neutral is at 50. And usually AMC stays above 50, at least somewhat. So we're hanging out at these levels. A lot of room potentially to rally to the upside. I think there's a better chance of actually going up than going down here in the near-term future because we have so much bad news that is priced in. But it's really going to come down to the Fed and Tesla earnings. So this is a major catalyst today and after hours, a major catalyst tomorrow. I hope you guys are ready. Trade based off of facts and data, not emotions. And what the facts and data is telling me, AMC stock holding up very well. Option buyers, institutional option buyers coming in, buying hundreds of thousands of dollars of calls that expire this Friday. And you do have a catalyst here on the near-term horizon whenever that next buyout catalyst does come out. AMC stock has been looking to acquire stakes in 5 different companies worth up to $500 million. And that is really what I could see as the next big catalyst. So that is basically going to be all for this video. A lot to be excited about. Let me know your thoughts down below in the comment section. Like the video, subscribe to the channel, do what you guys got to do. Get those free stocks down below in the description with Webull, Moomoo, and public sign up for Moomoo. Get deposit $1 or $100. Get varying amounts of free stock. I believe if you sign up with $1, you'll get 3 free stocks. Sign up with $100, you'll get 5 free stocks. Check that out if you guys want to be part of it. And if you guys want to come trade with us every time I make a trade, link down below in the pinned comment. We are ready to go with Tesla earnings. We got some free trades on both sides, playing it both ways, so I don't even care what happens. Hopefully we're gonna make some money. So thank you guys for watching. I will see you in the next one.